Well, morning, everybody. Yeah, I know you're shocked. Ed's here all by himself. Mike is out. I think he's camping this week. Anyway, he was traveling today, couldn't make it. And so I'm just going to go through what's going on this week. And we have huge things going on this week. Today on Monday, stocks are a little bit higher this morning and bonds are giving back a little bit. We're expecting a very bond friendly week this week. And the reason is because the CPI, that's the consumer price index, is coming out for tomorrow. And we're hoping that it shows it's lower. That's kind of the consensus. This is kind of the previous readings, the headline number was 4.9% year over year, and the core was 5.5 year over year. The market is expecting it to go down 0.2%, which is lowering the year over year inflation from 4.9 to 4.2%. I know it doesn't sound like much, but that's basically what they're looking at. So if these numbers don't come in tomorrow at what we expect, market's going to get worse. Rates are going to go up. If it comes in what they expected, probably get a little bit better. But then if it comes in much lower than we expected, then we should see a major rally. But we won't know until those numbers come out this week. The core reading is expected at 0.4%, reducing the year over year from 5.5% to 5.3%. So they're expecting the core reading to go down to that. And one of the reasons they're anticipating this is because the decrease in oil prices, used cars, and shelters costs. So it's a better time to buy a used car right now than before. We're going to also we saw a sharp drop in inflation expected. Okay, let me try that again. A sharp drop. If we see a major drop in inflation that's expected, of course, it's beneficial to rates. And that's bonds, react one way or the other, and that helps us for rates. When bonds go down, that's benefit for us. When the actual yield goes up. Anyway, let's move on. So Tuesday is the CPI number. Wednesday is the producer price index number coming out, which measures wholesale inflation. And again, like I said, it's going to be on Wednesday. So we got Tuesday, Wednesday numbers coming out that can make a huge difference in rates this week. Headline figure expected to drop from 2.3% to 1.5%. Core figure to go down from 3.2% to 2.9%. And that's going to be favorable for bonds. Now, hey, I just want to throw this out there. If I drop and I'm gone, it's because I'm having issues with my internet. My actual modem itself at the office is having problems. I can't get them out here till tomorrow. It's amazing how you can't just go swap things out, in this day and age. All right. So also what happens this week is the Fed starts its 2-day meeting starting tomorrow, and they're looking at whether they should hike rates or not. What most people are thinking is the Fed's going to skip hiking rates this meeting and not necessarily pause, but just skip it. I want them to hike. Just get us another 0.25%, showing that you are focused on what's going forward. You're going to mess it up one way or another. So just go ahead and give us that quarter. The Fed plans, we're going to look at the stuff, and they're going to really focus on the next meeting, which is July 26th. And the most important thing but Wednesday, what comes out is what Powell says. Not so much what they do, but what he says. And that's the most important thing. That can move markets. That's why I don't know why they give press meetings. They should just not. And that would help out us a lot. So that's kind of what's going on this week. Mike will be back tomorrow. He's going to do it from the campsite. And so hopefully he has a good signal. Like I was last week, I was up in Washington State at my son's place in Yelm, way out in the middle of nowhere in Yelm. And I didn't realize there's no internet. Basically 1 bar LTE, and his internet was satellite. And if it's like Hughes net, I don't know if you ever had like that. It's just, there's no way to do video. That's why I wasn't here really last week, but that's what's going on. I'm hoping this week we see a change. We're going forward with inflation showing that it is going down. We should, but we really don't know. We've never been here before. This is a unique situation. Most people never heard of inflation until, the last 13 months that we've been in this. We've been in this a little bit. And I looked back going, I cannot believe how long we've actually been in this. Most people got affected this month last year who saw a change in what's going on with their actual rates and sales. We didn't see it for myself in our area till October. Now right now what we're having is we have higher interest rates, low inventory, which we've never seen this before. 35% of our normal inventory is what's on the market. So if you only have 35% of the normal inventory, you're not going to be selling a lot of properties because they're just not out there. So we need them to build more homes And we've talked about this before. Stop giving beneficial. Here's 20 grand to buy a house. We don't need that. We need you to help work with the actual builders to build more homes, make it faster. We need to get them out there. Plus, with the rates go down, and if we see it getting back closer to 4 or 5%, we'll see a change in the market because more people will move, even if they have a 3% and go to a 4%. It's not that big of a deal. That's basically all I had for today. We'll talk tomorrow, see what the CPI numbers do tomorrow. And we'll see you again. Like I said, I'll see you tomorrow. All right. Make it a great day. If you run into Mike somewhere, you must be camping with him. If not, we'll see him back here tomorrow morning. All right. Make it a great day. And thanks for watching.